Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is for April 10th, 2025, getting on to 6:40 p.m. Central Time. All right, my friends, what wild markets, and that's what they are. Large volume, heavy markets, huge rally yesterday in stock indices, big break today, didn't take out yesterday's lows. Important. Energy markets rallied dramatically yesterday, gave back a huge chunk of that. So just look at it this way. You had a big relief rally. You've given back a chunk. Where are you? And we're going to talk about that because it's so important. The gold market is getting well bid. It's at new highs. The question is, can it keep going, or is the market going to get up here? And if you start reversing back up in the stock market, does it go nosediving? Because this market's anticipating the worst. And it's got a lot to look at. You have the U.S. meeting with Iran on Saturday. The question is, what's going to happen with Ukraine and the U.S., the mineral deal that's supposed to be there. Putin and the U.S., it's going to get nasty soon if Putin keeps up what he's doing. He's either got to make concessions and get to the table and start talking, or this president will have none of it. You'll see that's going to happen. Remember, President Trump has a short fuse. You've seen it, you know it, and I think the world knows that. And we'll see what happens. I'm not saying he can do anything with Putin. I'm not saying he can do anything with Xi. What I am saying is, when he says to you it's black from his perspective, and he's going to go down that road to create the issue. You'll notice today that China did not retaliate other than saying U.S. movies are not welcome in China. He's banning them. Well, the way they've been coming out, I can understand that anyways. All righty, so let's take a look at what we have coming out here. You've got big report tomorrow, the PPI. Under normal circumstances, we'd all be glued to it. But there's just so much going on. You know, these things have a lifespan, honestly, of 2 minutes, and that's about it. You're going to get the University of Michigan preliminary April consumer sentiment indices. They'll come out around 9. You're going to get bank earnings throughout the day. Morgan Stanley, JP Morgan, Wells Fargo, BlackRock. The hardest thing that I would have if I'm one of these CEOs and trying to give you forward guidance is, how do I do that? Because so much hangs on what these tariffs are, and nobody knows where we're at. So for me, I can see them doing one of two things. Either saying we don't want to offer it right now because of tariffs, or downshoot. All you can do is look good from that. So don't look for them to come out and say, business is phenomenal, we're going to do this. It's going to be the exact opposite in my head. So it's one of those two that I'd be looking for. So let's take a look and see what we've got. Let's go right off the bat to the S&P, which you can see for the week, you are up 3.41%. Yesterday's rally was so massive in its size, and by the way, on monster volume too, that you're still up. The big problem for this market would be this. This is a great chart to learn from. You had your huge decline. And let's just maybe see if we can get this to come back. It can, because this will count for so many of the different charts. You get your nosedive in the market again. You get a relief rally that comes up, and this was on Tuesday. The market nosedives again, but does not take out that low. This low you should circle on your charts. The lows that we had on Monday, if they get taken out on a Friday, you'd have to have a dramatic reversal back to the upside on Friday. Otherwise, you could get people just throwing in the towel going, I have had enough. What did you do today? You made the higher high and you pulled back. So we're getting a pattern here that is really interesting to keep your eyes on. First, you have a pattern of higher lows and higher highs. That says the market's out of a downtrend in terms of daily price action. The market made a run and couldn't quite get to that line in the sand. Generally, when you get an action like this, you like to fight a battle against that 18-day average. Didn't quite do it. It can still do it, but that's where I'd look for the battleground to end up. And the support is above these lows now at the lower Bollinger Band at 50-23.50, and you're no longer in oversold condition. You're hand-tied. Even if you close over the 18-day average and want to go up, where would you put a stop on your trade? All the way down here? You do realize the kind of numbers that you're talking about and how many thousands of dollars on one contract you would have at risk. When we look at the NASDAQ, this did the exact thing that I wanted. So we come back. I'm going to come back with you right here. Here's that pattern. You're down. You get that 1 day up. You come down, you don't take out that low, you go up, just miss the 18-day average, you hit it today, and now you're turning back a little bit from it. You see what I'm getting at? So it's done the job. Now the question is it going for these lows? Is it going for the Bollinger Band? Or is it going to say to itself, I'm going to try to close over that 19,234? For my money, my hand goes in my pocket. This is too rough to trade with. You didn't make it in the Dow to the 18-day average. You certainly made the run to it. You missed it. So it's the same program that you have here. And in the Russell, it's a different type of chart action because you made the lower low 2 days ago now. So it still has the 18-day average as resistance in the lower Bollinger Band. The overall pattern on all of them is the bias is down and they're fighting to see the next play that they're going to make. That's the best I can tell you on them. In the DAX, the market the other days went down to the combination of the 100-day average, the 200-day average, fought at the Bollinger Band, spun back up. Today gave back a little bit. If this market can clear the highs of Wednesday, I think you get right to the 18-day average, and that's where the game starts fresh again. In the 10-year note, I am not friendly on these markets. I mean, I don't know what's going on in the interest rate sector per se, other than I see bearish at play. Lower highs, lower lows, battleground so often is that 18-day average. It's right there. The support of the market's 109.29 to 21.5, and you're oversold. So to get this market going back to the upside, I can give you the story. You've got to take out what you've done yesterday. That would be today, Thursday's low, which it's done for Friday trade. Get back over Thursday's high, close over that, and you'd have an outside day up. You turn momentum up, the bias up, and you could be right back up to another level before you know it. It's an awful lot to ask of the market. In the 2-year note, you have fallen back to your battleground. I think you have to say, how often do you see me say that this is that neutral zone the market is fighting at? The trend is down, but the bias is up as the market is refusing to stay under the 18-day average. Unlike the 10-year and the 30, the chart pattern here is very different. Those are the markets under tremendous pressure. The dollar has made another dramatic plunge today underneath the lower Bollinger Band, oversold. I will repeat, it doesn't stay out of that Bollinger Band that long, but this is dramatic. I think the market's going under the 100 level to see what kind of stops are under there. We at the Linn Group have had a price count at the 98, 99 level that for those of you that get our free offers and you get onto that price count, you take a look at the dollar because we were talking about it this week. So you're approaching that next count. It's one of the last ones on the downside. After that, if it keeps going, it gets crazier numbers. I mean, really crazy. Could be under a 9 front number. In the euro, you stayed up and over the upper Bollinger Band today. You did that the other day. Then you came back. The trend is clearly up. It's overbought. Certainly staying over that band, very difficult. It only does it 5% of the time. The British pound. The Brits would love to cut interest rates. They're looking at what goes on, and the question is, how do they get the job done? And that's been their problem. You have a higher high and a lower low. In Bitcoin, Bitcoin did not come apart today exactly as the NASDAQ did. It did not have a good day, don't get me wrong. When we take a look at the market, you were down $2,900. But it is so similar to the stock indices, trying to establish these as lows with the Bollinger Band. I'd like to see the market come down, take out Thursday's low, get back over that, And then I think you'd get a buy signal if you got and closed over the 18-day average of closes. In the crude oil, all you did is fight to get back. You fought to get back in the Bollinger Band, and the market is still very much in oversold territory, under a 30 reading, still bearish as can be. Now there's talk that the U.S. sanctioned today another Chinese plant that works with Iran. So the screws are going on. I made mention of that to you earlier. We have been very quiet, or the Trump administration has been, about Putin. Have you heard one word about it? I don't think so. I mean, he said this has got to come to an end, but that was it. But because Iran and the U.S. meet tomorrow in the same building, I don't know if they'll meet face to face. The Iranians say they will not. They'll have messengers between the rooms. But I could not think of anything clearer than the Trump administration having 2 carrier fleets saying that Israel will join in the military exercise if it comes to that. So you've got it, Iran. You want to be beaten up? You will. You want to find a deal on this nuclear program and end this? You can. That seems to be what's on the table. In WTI crude, same thing. You just got to bounce back into the Bollinger Band. Nothing seems to be turning the market yet. And gasoline, same thing. So you fell under the band, you stayed there, you moved to the right. This is all still bearish action. None of this says, oh, I'm ready to pop to the upside. I wish it did, but I'm not seeing it. Where you are trying to make a stand is in natural gas. You've got the combination of the 100-day and the Bollinger Band. Even if that gave some ground, you've still got down here at 321, the 200-day average. But you're in an area where the market's certainly in a downtrend. I think the professional money has covered a lot of shorts. That does not mean they're going long. This is where the market's trying to make it stand. So I'll be looking tomorrow for one thing in many markets. Are we going to get what we call outside days? Outside days can be continuation patterns. They can be reversal of trend patterns. You have to recognize what they are. Number 2, when you violate an outside day, but let's assume you had a low, a high, and you come back in the very next day or so, you take out that low again and you close sharply higher. That's a violation. What it starts doing is setting up a certain number that the market tries to run to. The opposite is true the other way. With the course, you get access to the morning videos that I have. You get the charting software you see right here. 9 videos, inexpensive. It'll stick with you. So if you'd like to take it, just go to iraepstein.com. It's under the word education. It's where it belongs for you, and away you go there. Courses. You'll see it. It's all right there. I'm Ira. You have yourself a great evening. I'll catch up with you all tomorrow. Take care.